Hey, what's going on, guys? My name is Richard, and welcome back to the weekly watchlist video. As always, we'll go through the fundamentals and technicals of all the stocks on my focus list, and we'll talk about the specific technical setup that I would use to trade each one. If you enjoy my analysis, please go ahead and leave a like down below. It really does help me out and my channel, and subscribe if you are new. Getting right into it, we'll start with AAXN, or Axon Enterprise. Looking at the sales and earnings growth, you can see great increases the past few quarters. Last quarter, earnings were up 90%, sales were up 27%, and after-tax margins were up 16.3%. Looking at the annual estimates, you can see that in 2020, it's supposed to grow 13%, and in 2021, up a further 16%. The overall EPS rating is a 98, the Group RS is an A, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 98. Looking at the fund ownership, you can see a nice increasing trend. You've got one high-quality fund investing in this company. And taking a look at the chart, you can see big gap ups, which always catch my eye, and you've got the highest volume traded since the base on this past Friday. The RS line is approaching new highs, and the overall rating is a strong 90. Looking at the chart more in depth in TC2000, you can see that it just broke through this downward trend line right here on Friday, and as you can see, it's got large volume coming in, suggesting that big institutions are buying shares. And as I mentioned in Marketsmith, you can see these big gap ups on the 8th and also the 1st of June, which suggests, once again, institutional accumulation. So the setup that I plan to use for Axon is either one of my dot indicators, or if it breaks above this point of resistance at 97.74, or eventually above here at around 100. And 100 is always key because it is a Livermore level, so that's always a source of potential resistance because it is a key psychological level. So that is Axon, and next up on the list, we've got Chegg. Looking at the earnings and sales growth, you can see nice steady increases going back the past few quarters. Last quarter, earnings were up 47%, sales were up 35%, and after-tax margins were up 22% as well. For 2020, the estimates are up 23%, and in 2021, up a further 22%, suggesting great growth. The EPS rating is a 99, the Group RS is an A, the SMR rating is an A, accumulation distribution is an A, and the overall composite rating is a very strong 99. Taking a look at the fund ownership, you can see a nice increasing trend. You've got 5 high-quality funds investing in it as well. Looking at the chart, you can see that the RS line is going the right way and is approaching new highs. It's not quite there yet, but you can see that there's some volume coming in on this past Friday, and overall the RS rating is a very strong 96. Taking a look at the setup that I would use to trade the stock, you can see it did have a fast cast across on this past Friday, so it is actionable early next week based on that setup, or I'll look to see if it pulls back to the 21 EMA, undercuts it, and then reverses higher. I do like this higher low pattern that formed right here after finding support at this lower trend line that I drew from back in the base at 318. So I like the strength of this gap up. You've got a lot of shares traded on this day, suggesting institutional accumulation, and so far it's been holding up quite well, and eventually I want to see a breakthrough the 70.49 level on above average volume. So that is Chegg, and next up we've got Crowdstrike. So Crowdstrike was a failed green line breakout and did sell off this past Friday on above average volume, but to me it's still holding in there and is still hanging above the 21 EMA, and this is why I have it on my focus list. Taking a look at the earnings and sales growth, you can see that it's got great revenue growth going back the past 3 quarters, and last quarter earnings were up 118%, sales were up 85%, and after-tax margins were up 2.5%. In 2021, you can see that's not supposed to be profitable, but it is supposed to reach profitability in 2022. The overall EPS rating is a 69, the Group RS is an A, the SMR rating is a D, accumulation distribution is a B+, the overall composite rating is a 97. Looking at the fund ownership, you can see an increasing trend, although it did dip in September 2019, and you've got one high-quality fund investing in Crowdstrike. Looking at the chart, you can see that the RS line is approaching new highs, and the overall rating is a very strong 95. Taking a look at the technical setup that I would use for this, it would either be an undercut and recovery from this 21 EMA, or potentially another green line breakout on above average volume. On Friday, this was a bad bar because it closed near the bottom of the range. You can see the weekly and daily range up here on above average volume, but it's still hanging in there. It's above this low right here. So if it broke down below this, that would really worry me. But at this time, it's still hanging in there right at all-time highs. So that is Crowdstrike, and moving on, we've got Dexcom. So Dexcom pretty much has all the fundamentals that I look for: excellent sales and earnings growth going back the past 3 quarters. Last quarter, earnings were up 980%, sales were up 44%, and after-tax margins were up 10.2%. Looking at the annual estimates, you can see that in 2020, it's supposed to grow 15%, and in 2021, up a further 43%. The EPS rating is a 76, the Group RS is an A, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 98. Taking a look at the fund ownership, you can see the increasing trend that I like to see, and you have a whole bunch of high-quality funds investing in Dexcom. Looking at the chart, you can see that the RS line isn't near new highs. It still has some work to do to break above this high right here, but the overall rating is a 97 as it pulls back to the 50-day moving average right here. So taking a look at the chart more in depth, the entry setup that I plan to use is either a dot indicator as it rebounds from the 50-day moving average, or if it manages to break above this line of resistance at 404.56 and eventually this one at 415.36. Looking at its past, you can see that pulled back nicely to the 50-day right here, and again touched it on this past Friday on above average volume. So once again, this wasn't a good bar, but it did find support right at the 50-day moving average where institutions are likely to accumulate shares. So that is Dexcom, and next up on the list, we've got Fiven, another cloud stock. And overall, you can see it doesn't have the greatest earnings and sales growth, although it is profitable going back the past 3 quarters. Earnings were up only 6% last quarter, sales were up 28%, and after-tax margins were up 11.7%. In 2020, the estimates are down 10%, but in 2021, it's supposed to pick right back up an additional 28%. The EPS rating is a 53, the Group RS is an A+, the SMR rating is an A, the accumulation distribution is a B+, and the overall composite rating is a 97. Looking at the trend of fund ownership, you can see it is increasing. You've got 5 high-quality funds investing in this company. Looking at the RS line, you can see that it is approaching new highs. The overall rating is a 95, and you had some nice volume coming in on this Friday with a strong close. And for potential setups, I would like to see it break above this 108.96 level on above average volume, just like it did on this past Friday. So that is my plan for Fiven. And next up, we've got Infi Corp. And overall, you can see excellent earnings and sales growth going back the past 3 quarters. Last quarter, earnings were up 88%, sales were up 70%, and after-tax margins were up 22.6%. And looking at the annual estimates, you can see in 2020, it's supposed to be up 66%, and 2021 up a further 31%, so that's a lot of expected growth. The EPS rating is an A2, the Group RS is an A, the SMR rating is an A, accumulation distribution is an A-, and the overall composite rating is a 98. Looking at the trend of fund ownership, you can see it's increasing nicely. You've got 3 high-quality funds investing in this stock. Looking at the chart, you can see that the RS line is going up, although it's not quite at new highs at this moment, and the overall rating is a 95. And taking a look at the chart in TC2000, you can see it's approaching this downward trend line right here that it hasn't managed to break just yet, but it had a strong rebound from the 50-day moving average on this past Thursday and Friday. So look for a break above this downward trend line or above this point of resistance at 117.68 and eventually above this at 119.84. And once again, it would be a sign of weakness for me if it breaks below the 50-day on above average volume, and especially if it breaks below this low at around 106.54. So that is my plan for Infi Corp, and you also could use some dot entry setups early next week if it acts well. Next up on the list, we've got MRSN, which is a completely speculative play based off the chart. Looking at the earnings and sales, you can see there's none at all. It's not supposed to be profitable in 2020 or 2021. The EPS rating is a 20, the Group RS is an A+, the SMR rating is an E, accumulation distribution is an A-, and the overall composite rating is a 77. Looking at the fund ownership, you can see it is increasing, but you've got no high-quality funds investing in this company. Looking at the chart, you can see that the RS line is approaching new highs, if it's not right at all-time highs, and the overall rating is a very strong 99. And looking at the chart, you can see it had its institutional due diligence phase and is now right up against that IPO high price. So the entry point would be a break above this level at 23.96 on above average volume. You can see it's gotten knocked down on 2 days, last Tuesday and also this past Friday, and didn't manage to break through. So that's what I'm looking for MRSN, but please keep in mind that there's no real fundamentals behind this stock and it is a biotech, so it's definitely a lot more risky. So moving on, we've got our next stock, Net. And you can see that after the huge move up on volume, it's consolidated over the past week or so, and looks like it's holding up very well relative to the overall market, and it could move up once again once the overall market recovers from this pullback. Looking at the earnings and sales, you can see that it has excellent revenue growth, around 50%, going back the past 3 quarters, and it's not yet supposed to be profitable in 2020 or 2021. The overall EPS rating is a 22, the group RS is an A+, the SMR rating is a D, the accumulation distribution is a B, and the overall composite rating is an 86. Looking at the fund ownership, you can see it's increasing nicely. You've got 3 high-quality funds investing in net. And the RS line is approaching new highs, and the overall rating is a 96. So looking for entry points, this would be an add-on for me. I also bought back in here, and it did have a fast stochastic cross as it held up well relative to the overall market. So what I'm looking for is either move up on above average volume early next week, and eventually a breakout into new all-time highs above 38.48. So that is net, and moving on, we've got Octa. So this has been moving well since the March bottoms, has recently formed a consolidation pattern as it digests this move. And overall, you can see that it has excellent revenue growth, although it's not yet profitable, so similar to net, and it's also not supposed to be profitable in 2021 or 2022. The EPS rating is a 58, the group RS is an A, SMR rating is a D, accumulation distribution is a B-, and the overall composite rating is a 94. Looking at the fund ownership, it's tripled over the past 2 years. You've got 5 high-quality funds investing in this company. Looking at the RS line, you can see it's increasing and approaching all-time highs, and the overall rating is a 95. Looking at the chart for potential entries, you can see it did have a fast stochastic cross this past Thursday, and it held up well on this Friday. You can see it has a long tail here as it recovered all the way to its open price, although it was down on the day. And what I'm looking for is a breakout into new all-time highs on above average volume. Next up, we've got RingCentral, or RNG. You can see it doesn't have the best earnings and sales, but earnings were up 12% last quarter, sales were up 33%, and after-tax margins were up 6.5%. In 2020, it's supposed to increase 12%, and in 2021, up a further 29% in terms of annual EPS. The EPS rating is a 90, the group RS is an A+, the SMR rating is an A, the accumulation distribution is a B, and the overall composite rating is a 98. Looking at the fund ownership, it's more than doubled over the past 2 years, and you've got 6 high-quality funds investing in this company. Looking at the RS line, it is approaching all-time highs, although it does have to make it above this peak right here, and the overall RS rating is a very strong 96. And as for potential entries, what I'm looking for is a break above this 292.48 level on above average volume. And you can see that it acted really well on this past Friday. As the overall market was down, it was up on above average volume, which is exactly what you want to see in high RS stocks. So that is RNG, and next up we've got Team. And looking at the earnings and sales, you can see nice consistent earnings and sales growth. Last quarter, earnings were up 19%, sales were up 33%, and after-tax margins were up 15%. In 2020, the estimates are up 28%, and 2021 up a further 23%, with the revisions up as well. The EPS rating is a 98, the group RS is an A+, the SMR rating is an A, the accumulation distribution is an A-, and the overall composite rating is a 99. Looking at the fund ownership, you can see a nice increase over the past 2 years, and you've got 6 high-quality funds investing in this company. And looking at the RS line, you can see it is going in the right direction, although it's not at all-time highs just yet, and the overall rating is an 89. And looking at the technicals, I would like to see it consolidate a little bit more, tighten up on this right-hand side, and eventually break above this downward trend line right here on above average volume. And looking at the chart, there are some signs of institutional accumulation. You can see on this day, it fell all the way down here and then recovered strongly above the open and the previous day's close on above average volume, and that repeated also on the 5th and also on this day on the 16th. So I like how the 50-day moving average is supporting the stock, and I do want to see a breakout into new all-time highs eventually on above average volume. So moving on, we've got Tesla, which has been hanging in there right at all-time highs, and overall you can see that last quarter earnings were up 143%, sales were up 32%, and after-tax margins were up 3.8%. In 2020, the estimates are up 999%, and 2021 up a further 268%. The EPS rating is a 65, the group RS is an A+, the SMR rating is a C, accumulation distribution is a B-, and the overall composite rating is a very strong 97. Looking at the fund ownership, you can see it is increasing over the past 2 years, and you've got 4 high-quality funds investing in Tesla. Looking at the RS line, you can see it's right at all-time highs, and the overall rating is a very strong 99. And as for entries, I do want to see it recover this green line that it's set back at its exhaustion gap right here. And eventually I want to see a dot indicator and a move through this resistance level at 1027 on above average volume. So that is Tesla. And last up, we've got Zscaler. Looking at ZS's earnings and sales, you can see nice growth going back the past 3 quarters. Last quarter earnings and sales were up 40%, and after-tax margins were up 8.2%. In 2020, the estimates are down 13%, but in 2021, it's supposed to pick right back up 29%. The EPS rating is a 47, the group RS is an A, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 95. Looking at the fund ownership, you can see a nice increasing trend. You've got 2 high-quality funds investing in Zscaler. Taking a look at the RS line, you can see it's right at all-time highs, although it did dip on this past Friday, and the overall rating is a very strong 96. And I did sell this on this past Friday because this was a bad bar, finishing right near the low of the day and the week on above average volume, and I want to protect the small gain that I did have. So with that said, I am looking to get back in if the overall market continues to act well, and it starts moving up towards this 115.17 level. So I'm looking to use either a stochastic cross entry, a Bollinger Band bounce, or an undercut and reversal above the 21 EMA. So that is my plan for Zscaler, and overall my favorite setups for this week are Infi Corp, ZS, and also Net. So overall, those are my top 3 setups, and make sure you don't forget to leave down below your pick for this week's stock pick contest in the same format as last week, and I'll be posting the results from this previous week very soon on Twitter. So thanks so much for watching, and please remember to leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.